Unit 3. Pre-project risk management. Pre-project risk management is multifaceted, and it includes detailed cataloging of the risks involved in a project. The assessment's objective is to effectively manage the risks based on types, potential severity, and available resources. And while a pre-project hazard assessment is an essential part of the overall picture, it's not the only consideration. Unit 3 covers two major elements, insurance and pre-planning, which both fit under the broad topic of risk management. The importance of insurance cannot be overstated, and will describe coverage types and common practices. Likewise, anticipating risk and planning accordingly results in fewer incidents and builds resiliency in your organization. We'll get into the details, including the highest value actions to take. Insurance. Ensuring your contractor is adequately self-insured or is otherwise covered by a suitably comprehensive policy is the single most important and valuable risk management activity a client undertakes. In most contracting scenarios, clients require their contractors to self-insure, which means they obtain their own coverage and then provide their clients proof of insurance. Certificates of insurance. When a contractor self-insures, it's vital to manage the following. Before the contractor arrives on the job site, make sure a certificate of insurance, a COI, is provided that proves coverage for the company, its employees, agents, and subcontractors. Coverage must be placed in the jurisdiction where the work is being done, and make sure the COI provides that the insurer gives 30 days written notice of cancellation to the client. Additional insureds. It's become common to require that a contractor's insurance policy to name their client as an additional insured. The additional insured endorsement is associated with general liability policies that cover individuals or groups not named in the master policy. With this endorsement, the additional insured is protected under the named insured policy and can file a claim in the event of a mishap. That means if a claim or a lawsuit materializes, you would be covered. This action protects your loss history and can lead to lower premiums. Insurance types. There are three minimum recommended coverage types: commercial general liability, automobile, and umbrella, otherwise known as excess liability coverage. Commercial general liability, also known as CGL. Contractors must obtain a CGL policy to cover damages or losses incurred when events lead to bodily injury or illness, property destruction or damage, and what's called personal or advertising injury. The amount of coverage that your business needs depends on three factors: perceived risk, where you operate your business, and the types of products that you manufacture or install. Perceived risk. Consider the amount of risk associated with your business operations and functions. For example, if you manufacture explosives, you would generally need more coverage than another organization that provides pastry to coffee shops. Premises and operations liability. If you operate in a province or state with a reputation for awarding high amounts of damages, you may wish to purchase higher liability limits. And the type of product manufactured and installed. If you manufacture, transport, or use dangerous products on client work sites, carrying higher limits of liability insurance is typically good risk management. As reference points in the commercial construction business, a minimum amount of insurance per occurrence of $5 million is widespread. In industrial construction and other high-risk operations, a minimum of $10 million per occurrence is entirely commonplace. Personal and advertising injury. This element of a single policy protects against offenses made by you, your staff, or your contractor's staff, if you are a named additional insured. Harms include libel, slander, disparagement, or copyright infringement in advertisements. Sources of loss. There are some sources of loss to be aware of that arise from contractor operations, products, and completed work. the liability or responsibility assumed by the contractor, the liability assumed in a business contract, and the contractor as an additional insured. Automotive liability. Require the contractor to obtain automobile insurance to cover damages incurred through bodily injury, death of a person, or property damage arising from the ownership, maintenance, or use of a motor vehicle or trailer, owned, leased, used on behalf of, or borrowed by the contractor. Umbrella or excess liability. Require the contractor to obtain umbrella liability insurance to cover damages from incidents that result in bodily injury, property damage, and personal and advertising injury with at least the same terms and conditions as the policies mentioned previously. Umbrella coverage provides excess limits when the limits of underlying policies are exhausted by the payment of claims. It also picks up the aggregate limit of the underlying policy when it's insufficient to meet coverage requirements, and it protects against some claims not covered by the base policy. Risk planning. It is a best practice that when a project is awarded to a qualified bidder that the client document the following critical elements. First, the proposed project's schedule, including key milestones, and a description of the technical approach of the work, called an execution plan. The proposed project management team, including field operations and the support disciplines such as engineering, quality, health and safety, cost control, and human resources. The safety execution plan is a formal approach to hazard identification and treatment. Key elements include quantifying risks, establishing controls, monitoring compliance, and promote safety climate and culture. A safety execution plan includes legislated minimums, plus any client or other predefined requirements, and is a fundamental project management success factor and a contractor management best practice. At a minimum, the SEP includes a hazard assessment that identifies high-risk work activities and specifies the control measures to be implemented. Documents how field operations will control exposures to risks at a specific site. Describes responsibilities for all roles in the organization, and it identifies key performance benchmarks that typically include both leading and lagging indicators of safety performance. Also, a key success factor is defined leadership activities and a system of accountability that is primarily focused on management and supervisory personnel. The Quality Control Plan, or QCP, is a set of written standards that govern the quality of products and commodities and their installation on a given project. A QCP also details quality assurance measures, the methods of accountability, and the required documentation. Generally speaking, the plan defines quality objectives to be obtained. For example, the characteristics or specifications, uniformity, effectiveness, cycle time, cost, dependability, etc. The steps in the process that constitute the operating practice or procedures of the organization. Allocation of responsibilities, authority, and resources during the different phases of the project. Documented standards, practices, procedures, and instructions to be applied. Suitable testing, inspection, examination, and audit programs at appropriate stages. A documented procedure for changes or modifications to a quality plan. And a method for measuring the achievement of the quality objectives. The Cost Control Plan, CCP, includes a description of the cost control methods to be used for the work. The CCP describes the specifics of monitoring and controlling costs during the project lifecycle. It consists of the system and baseline to measure the project costs, the reporting, and the controlling mechanisms. It also includes the following: identification of the authority for cost management, nomination of the authority for approval of changes in scope, procedures for quantitative measurement of cost performance and its reporting. Finally, formats for reports, their frequency, and distribution. Unit 3 Summary. Ensuring adequate commercial general liability insurance is in place is the highest value action a contractor can take to minimize financial risk from unplanned incidents. In Unit 3, we covered the types and amounts of insurance common to contractor operations, and risk planning that reduces incidents and builds resiliency in an organization, and written plans for execution, cost control, safety, quality, environment, and other key result areas that focus efforts and repay investment through reduced losses.